So we are supposed to appreciate, ladies and gentlemen, the qualitative measures. We are supposed to appreciate here the qualitative measures, and of course the quantitative measures. And the qualitative measures, or rather, to be able to tackle all this, we must, number one, be able to know how to measure the firm's performance, KPIs, using the famous balance scorecard. We have number two, the Fitzgerald and Moon model, and then of course we have now the other KPIs like the return on investment, residual income, right? etc. So we want to start with the first one, which is quite straightforward, called the famous balanced scorecard. So please mention there for me, balanced scorecard. So before I look at the question that came last semester called under balanced scorecard, I would want us to have a quick talk regarding this balanced scorecard, general talk regarding this balanced scorecard. Remember, a balanced scorecard is that instrument that gives us performance of an institution from how many perspectives? 4 perspectives. It gives us the scorecard, performance of any institution from 4 areas, 4 perspectives. The first one is the financial perspective. So we have here what we call the financial perspective. That's number one. Then number 2, we have what we call the customer perspective. Then we have the internal business processes, perspective. Then we have learning. And innovation. Learning and innovation, or learning and growth perspective. Learning and innovation perspective. So whenever they talk about performance measures and a balanced scorecard, you're supposed to know that really your performance has to be what here? Your performance has to be balanced somehow. The moment you score very well in financials, and then you disregard great performance in the other metrics, your performance will not be balanced. You'll only be taking care of one stakeholder, who is the shareholder. That's a greedy perspective, because here you are posting huge profitability. Profitability in this case, it belongs to who? It belongs to the shareholders. But remember, as you post huge profits here to shareholders, what about, in this case here, those customers perhaps that you never gave the right quality? But for example, in this case here, you were there to lower the quality, bought inferior raw materials, etc., for you to post what here? High profits. What of employees? Employees that, for example, you paid little salaries, simply to minimize on your costs, to be able to post a high profit here for the shareholders. If you want, ladies and gentlemen, the firm to grow, it has to grow equitably. There must be fairness. There must what we call what here? A balanced performance. There must be a balanced performance. Now listen to me very carefully. How does this performance here be balanced? The first one, we are not saying that financial growth is bad. It's good. But remember, it has to grow amidst the other factors. So under financial performance, we would really look at our organization and see how we are growing in terms of revenues. So we expect, if you're writing a few things here and there, we expect revenues to grow, and we expect costs to be minimized. As a good CEO, always you fight on growing your revenues. You fight on reducing your expenses. Very important. So in short, ladies and gentlemen, under the financial perspective, we shall be so keen with what? whatever costs we incur, we shall be looking at the return, our return on this investment. So we are saying that amongst the many important criteria that we shall be looking to measure the financial perspective, we shall be looking at the return on investment. The return, how are the profits, right? Vis-a-vis what we are investing in this company. So ROI is very important. Now from there, ladies and gentlemen, we go to the customer perspective. Customer perspective, give me just 1 minute. 1 minute, I'm coming back. Balance scorecard is saying we've got how many perspectives? 4 perspectives. So we have the financial perspective. We have the customer perspective. We have the internal business processes, our internal processes. We have what we call the learning and what here, the learning and innovation. Some books will call this one here the learning and growth perspective there. So I've already discussed the first one, financial perspective, and ensure that your ROI is increasing, your return on investment is increasing. And how do we do that? By ensuring that we're able to post higher revenues. We're able to post higher revenues every day. We're able to post our profits every day. And then, of course, whatever investments, whatever costs we're incurring here for our internal activities, should be going down. If you look at companies like Safaricom, these guys are great in terms of profitability. In terms of revenues, they're raking in billions of Kenyan shillings. But again, if you go to the same Safaricom, you'll be surprised that these guys are laying off workers simply because of what they would want to minimize their costs. So anytime they see any redundancy, however little, they'll always do what here? Fire people left, right, and center like that. Why are they doing that? Because the person who is in charge of costs there knows that he can only become relevant whenever, ladies and gentlemen, the costs are either maintained or going down, even if the revenues are increasing. From there, we have the customer perspective. So under customer perspective, what are we looking at? 4 things. A good company must be acquiring new customers. So we have customer acquisition. The first thing, ladies and gentlemen, if you want me to respect your organization very well, a good business must be aggressively acquiring new customers. Every other day, we must be able to see new customers, etc. That is customer perspective. And then number two, we have, ladies and gentlemen, what we call customer satisfaction. Customer satisfaction. So we must be able, if it's advanced management accounting, if I'm teaching you advanced management accounting, I must be able to ensure that you guys, your expectations are met. If your expectations are not met, you paid some fees to us, and we are, in this case here, ladies and gentlemen, serving you below expectations, depending on the percentage. As the percentage in this case here becomes a percentage difference, what you expected is here, and what you're delivering is down there, then that in business is called crime. It's criminal, right? This organization will never do what it will never grow, In terms of growth of a business, ensure that you satisfy customers. And then we have what we call loyalty. So we have what we call loyalty here. Loyalty is all about, we would want to play this ball in a way that in future, anytime anybody thinks about CPA, about their cousins, about themselves, etc., they think about RCM Online College. So we'd want a situation where we even have a loyalty program. Loyalty is all about, in this case here, making referrals to us. It's all about consuming or coming back to us throughout. So, ladies and gentlemen, a loyalty program, maybe it's in the UK, even back home here, locally here, you'll get companies like Safaricom, they have a loyalty program, where in this case here, they reward those who consume more and more of their products. They have what we call bonga points. In supermarkets, they have what we call the Zawadi points. All right. So we have what we call loyalty. Very, very important for you to have that. And then the last one about customers is the concept of what here is the concept of awareness. The last one is the concept of what here? Awareness, customer awareness. Publicity. Ile kitu ya kusema kwamba chema cha jiuza, huo ni ujinga. Right now, regardless of how good of a service you're offering, you must get out there and get people to know. You must publicize. You must, in this case, get the influencers in the society and have them speak about your product. So in this case here, awareness is key. From there, we go to the internal processes. So internal processes, basically, this is all about automation. Automation, ladies and gentlemen, if we are to get miles and miles and miles ahead, we must ensure that we are automating most of our processes. This thing of expecting manual processes to work for you cannot take you far. If it's revenue, receive your revenues, ladies and gentlemen, through, for example, M-Pesa, etc. Automated processes. If you're doing online business, let there be a situation where somebody will be able to pay for your products. If it's a course like this, it's pay and do what you play, right? So they pay like this, they're able to get, for example, a video, they play like that. So when you have automated processes, your risks will go down, right? Customers out there will be able to respect you more. So you'll be able to earn, in this case here, more revenue, more credibility, etc. So in terms of internal processes, ladies and gentlemen, ensure that you are innovating. You are coming up with automated what year systems. From there, ladies and gentlemen, we have learning and what year innovation and learning. Here we expect you to put your employees in classes. Let employees, in this case here, learn. Employees who are well learned will be what will be more innovative. So it's learning and innovation. Don't go and employ an accountant and then have this accountant of yours, ladies and gentlemen, just being there. Things are changing outside here. VAT rate, for instance, is no longer at 18%, went down to 16%. And there are some products, in this case here, for example, petroleum, etc., whose VAT, right, is not even the 14% that you're using currently. So you want a situation where you pay fees for your accountants, in this case here, to some credible institutions here to keep on studying like that. When they study, they'll be able to, of course, be abreast with whatever changes we have, And if that happens, ladies and gentlemen, then automatically everything will be what here will be okay. Now, from there, we have this concept of what here? Innovation. If you look at, for example, during this pandemic, there are those organizations that went against the odds, right? They went against, in this case here, heavy odds to post huge revenues against all expectations. Expectations were that we have a pandemic here. People have locked up themselves in their homes. We expected revenue to be zero, right? But those companies went against the odds, against the grains, and posted heavy revenues, heavy profits. What was able to put those companies up there against all odds, ladies and gentlemen, is what here? Their prowess in terms of innovation. I remember one day, was it in 07? I can't remember exactly, but I remember one day when Raila Amolo Odinga came and told, in this case here, his people, his followers, you know, he has a crazy following as well, right? He told his followers, you know what? Resist milk, Brookside milk, to be very specific. Brookside was affected immensely. We are told that their revenue went down by almost 50%, right? And so we had all the other companies that he recommended his followers, in this case, to resist. Their revenues going very, very much, reducing drastically. One of those companies that this gentleman called and told his followers here to resist was who? Was Safaricom. In that year, Safaricom's revenues increased by over 10%. It is the only company that followers here were told to resist, and they could not really be able to sustain the resistance. Why? I mean, because of innovation, because of M-Pesa, because of the data. We know that Safaricom is way ahead in terms of data compared to these competitors. So people in this case here could lock their phones, say for an hour or 2 hours. At some point, they had to open their phones to see whether there is any M-Pesa coming on board. Even themselves, in this case here, they wanted to transact using M-Pesa. So they could not hold, in this case here, really, onto the promise they were making to their party leader, right? Innovation is key to any thriving business. We must be very innovative. And for us to be innovative, ladies and gentlemen, we must incur quite a lot in terms of what we call research and development. Research and development. We must have a research and development department. If you look at organizations, ladies and gentlemen, for instance, EABL, I'll put EABL on top of what here? On top of innovation. These guys are very innovative. You'll get, for example, they keep on looking at various markets. Like now they are targeting ladies. They are targeting ladies quite a lot. So how do they target them? They make brands that are quite sweet. I don't take beer, but I hear people talk of, for example, the Snap, the Tusker cider, etc., which are what here? Very sweet, and basically targeting who? So these guys are very innovative. Some other beers, I'm being told, even spirits that they produce, I'm being told, have honey, right? So they are very innovative, and that is why every other time you will never get shareholders of EABL crying that they have missed out on a dividend. No, they are what here? They are very innovative. So, ladies and gentlemen, that is just a little background that I wanted to give to you. In this case, we should be able to help us to tackle a few past paper questions, or I want us to get out our past papers. Are we ready? 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 Are we ready for the past papers now? Are we ready for the past papers? I don't think they are ready. I don't think they are ready. Are they ready? Are they ready? Are they ready? Great. Great. So I want us to start with May 2019, question number 5A. May 2019, question number 5A. May 2019, question number 5A. Once you get it, please say, hey, say yes. Why for yes? May 2019, question number 5. Yes, Martin says yes. Martin says yes. Thank you so much. Global chain, yes. ML, yes. Global chain, yes. Global chain. Thank you so much. So required, explaining the current status of Global Chain Limited, prepare a balanced scorecard report covering the 4 perspectives using the above information. Using the above information. That's an examiner who is wishing me what here? Success. Who is wishing me success? Who is wishing me success? Okay. Okay. Great. So I will start with the financial perspective. I'll start with the financial perspective. Please write down there. You know, first of all, you have to introduce like balance scorecard is a financial instrument that is used to measure the performance of what here an entity. From how many perspectives? 4 of them. You have a listing for the examiner very nicely. 1, financial perspective. 2, customer perspective. 3, the internal business process perspective. 4, learning and what here? Learning and innovation. Learning and innovation. So you must start from there. You must start from there. Explaining the current status of Global Chain Limited, prepare a balanced scorecard report covering the 4 perspectives using the above what here? Information. Using the above information. So you must start by describing a little bit, tell the examiner that you know what a balanced scorecard is, a financial instrument that is used to measure the performance of an entity from 4 perspectives. Namely, number 1, the financial perspective. Number 2, the customer perspective. Number 3, the internal business process perspective. Right. Number 4, the learning and what here? Innovation perspective. So after doing that, now I have to put the case question in context through each of the perspectives. I'll be able to pick the metrics given there. So I'll write there financial perspective, the financial perspective. So under financial perspective, you guys, I would want you to look at the metrics given. For example, percentage of staff promoted. I hope you are able to see that table there. I hope you guys are able to see that table there. We have percentage of staff promoted, average lead time for restocking. We have sales turnover. Sales turnover, that has to be a financial thing. So just write there into brackets, sales turnover. These are financial metric. Loyalty points awarded to customers. This goes straight away to the customer's perspective. Total number of staff grievances, that cannot be under financial. Operating expenses will be under financial. Customer satisfaction will not be under financial. Processing time for goods returned, that is about our processes. Now, ladies and gentlemen, I've been able to identify 2 of them falling under financial. But now what do we write there? The question is very straightforward. We are told a Global Limited has supermarkets located in most towns and cities across East African region. Over the last few years, profits have fallen, prompting the top management to seek technical advice from CP Limited, a consulting firm that specializes in business turnaround. So CP Limited has managed to obtain relevant information from the management of the company and has organized it as follows. So among us those things, in this case here, in terms of financial perspective, we have picked sales and we have picked operating expenses. So we want to see, ladies and gentlemen, whether there is anybody who will be able to make a very good argument there in terms of the balance scorecard. What do you have to tell us about sales turnover? What do you have to tell us about operating expenses? I'm giving you a minute to breathe through this. It's a straightforward thing. 1 minute, just think through it. You can see like what Jemima is telling us there. Jemima is saying declining performance. Great, great. Expenses increased. Great, great, great. So remember, very many of us will be able to answer this question so nicely, but they forget one thing. They forget one thing. So financial perspective. Financial perspective. We have picked the first metric here, which is what here? Growth in sales. So the objective here in terms of sales, you must mention the objective for us. So in this case here is to grow sales, increase sales. So the objective, the goal is to increase sales. So grow, increase sales. That is objective, right? And then, ladies and gentlemen, how do we measure this? How do we measure this? So to measure, for example, we could talk about what here? Changes in the sales figures. We could just measure this using the annual turnover, annual sales, or annual turnover, like that. That is the measure. Now, after that, ladies and gentlemen, then I'll be able to look at, for example, the KPI now, the measurement itself. So in this case here, the things on the ground. So when you look at, for example, the target, how much is the target? If you look at the question, ladies and gentlemen, here, in terms of sales, look at the target vis-a-vis the actual. Look at the variances. Look at the variances. If you look at, for example, the year 2016, the sales there target was 208. 208. And the actual was 200. Look at 2017, we are targeted 210, and yet we posted lower sales of 192. You can see 2018, we are targeted 215 sales, and we made it. So in this case here, target vis-a-vis actual, I can see in this case, ladies and gentlemen, that the actual was consistently lower than lower than the target, lower than the target. This means what? So in this case here, basically we are making what here remarks. We are making remarks here. We are making our remarks now. We are doing performance comparisons. So actual was consistently lower than the target. So meaning that the objective is not met. Consistently lower than the target, meaning that this indicates poor performance. This indicates poor what here? This indicates poor performance. This indicates poor performance. So target versus what here? Actual. That is the first thing. And as somebody told us that this actual sales trend is declining. Actual sales trend is declining. Somebody looked at the actual account at 200. From 200, we went to 192. From 192, went to 169. So the actual sales trend is declining from 200 billion to 169 on average, to 169 on average, like that, to 169. This again is an indicator of what here? This is an indicator. This is an indicator. This is an indicator of what here? This is an indicator. This is an indicator of poor performance, of poor financial performance. We are not able to meet our target here, really, which is to increase what here? Sales. So please remember, these perspectives, always be discussing them like this. What is the major objective? How are we going to measure and see whether we have met the objective? And what are the remarks when you look at things on the ground like that? So I could take sales as the first one. You don't have to combine them. Remember the objectives, you must have been taught this. The objectives can be many. So I will take, in this case, here, sales as the first one, and then I'll come and look at operating expenses as the second goal. So can we go to the second one? Can we now go to the second one? Can we go to the second one, please? It's just the general comments that are important. Can we go to the second one now? Can we go to the second one, abracadabra? Aha. It's only one person saying yes, meaning that the other students are not okay. At least I've got another one saying yes. So, ladies and gentlemen, then we shall go to the second one. The second one, under the financial perspective, I would want to look at the expenses. Remember, basically, the financial perspective is all about profitability. It's all about profit. And to get profits, you normally look at revenue vis-a-vis what your cost. So here I've been able to look at the revenue angle. Now I'll be able to look at the cost angle. So the second goal in this case here is to reduce operating expenses. This is the general rule, right? So in this case here, then what will be the objective here? The objective, again, I'll just repeat this, is to reduce the operating expenses. Reduce the operating expenses. That is the major objective, ladies and gentlemen. And of course, in this case here, how shall we be able to measure this? How do we measure this? Using the annual, the one that has been given in the question. It's called operating expenses in billions. So annual operating expenses. Annual operating expenses. Annual operating expenses, like that. So then what is happening on the ground? The remarks. Do we have targets there? Do we have any general increasing or decreasing trend? When I look at operating expenses, I can see the actuals. So I can see the targeted there. Ladies and gentlemen, I could see, or rather I'm able to see in 2016, I targeted 180, but the actual was 190. Is that good for the business? Is that good for the business or bad for business? Is that good for business or bad? First of all, compare the actual versus the target. It's bad because the expenditure, it's bad because the expenditure in this case here turned out actually to be more than the target. And you can see there is consistency there. You can see actuals. All actuals are higher. So actual expenses are higher. So the first one, actual vis-a-vis, in this case here, the target, vis-a-vis the target. So you're saying generally actual is higher or are higher than what here than expense-wise, poor performance. Poor performance. That's the first thing. The first thing. Ladies and gentlemen, when you be employed as a chief finance officer over any company, you will be required here to ensure that cost of sales, operating expenses are what here minimized. When you see these guys, what is happening? When you see these guys, ladies and gentlemen, what is happening here? Number two here is that the actual operating expenditure is growing. 190 to 199. The actual operating expenditure. The actual operating expenditure. The actual operating expenditure grew. Remember, the sales was going down. Then why were the expenses really growing? You can't justify that. So the actual operating expenditure grew from, you can also quote figures, grew from 190 to 199 billion, 190 to 199. You simply come and tell us again, this is an indicator of what year of poor performance. This is an indicator of poor performance. It's an indicator of poor performance. So that's financial perspective. So if I'm the one doing this, I'll straight away now go to the second perspective called the customer perspective. So here now we have the customer perspective. Okay, so can I wrap this? 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 Yes. So customer perspective, now this will come from your side. Please, from the information given by the examiner, would you kindly come and tell me which ones are affecting the customer? 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 From the ones given there, which ones in this case here? Yeah, there is a customer satisfaction what here? Index. There is customer satisfaction index. I love that. That's number one. That's number one. Any other? Any other? Any other? Customer satisfaction index, Jemima, I love that. Any other? Any other? Any other? Yes. Loyalty points awarded to customers. Yes. Loyalty points awarded to customers. Actually, I could even start with that one. Loyalty points are awarded. So in this case here, loyalty points awarded to customers. To customers. To customers. So in this case here, the objective here should be to maintain our customers. So the objective is to increase the loyalty points. Increase the loyalty points. Right. And how are we going to measure? What is the performance metric given there? So measure, I'll be able to look for the measure there. I'll be able to look for the measure there. Measure there. Yeah. It's loyalty point awarded to customers as a percentage of sales value. Loyalty points awarded to customers, into bracket, the way it is just written there, into bracket, percentage of what here? Sales value, percentage of sales value, percentage of sales value, right? And then now you go to the remarks. So now look at what is happening on the ground. Look at what is happening on the ground, and then you give me some mark there. Give me, in this case here, some remark there. Give me some remark there. Give me some remark there. Give me some remark there. So first of all, I would want to hear you guys comparing the actual vis-a-vis what here? Actual vis-a-vis the target. The target. Actual vis-a-vis the target. I'm not hearing you guys. I'm not hearing you guys at all. I'm not hearing you guys at all. Yes. So actual is consistently lower than the target. Thank you very much. So in this case here, what is telling us that actual on average is lower than target. And yet we have said that we expected for the objective to be met, we expected to be decreasing the loyalty points, right? So therefore, poor performance. Right? Poor performance. Average. On average, if I take the average of the three, 1.4 plus 1.3 plus 1.2 divided by 3, I can see straight away that average will be lower than the target. Will be lower than the target. So the actual on average is lower than the target. So poor performance. Great. From ladies and gentlemen, come and give us the trend. The trend about the actual. So I can see the actual is decreasing with the time. The actual loyalty points given to customers is decreasing with time. Is that true? 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 Yes. So of course you can see we had it from 1.4% and now it is 1.2%. So from 1.4% to 1.2%. Poor performance. Poor performance. Thank you very much. Thank you very much. So that is loyalty points. And then I can come and speak about the other thing that falls under customer perspective, ladies and gentlemen, is the customer satisfaction index. The customer satisfaction index. Customer satisfaction index. So under customer satisfaction index, ladies and gentlemen, what is the major goal here? Objective here is to see our customer satisfaction increasing. Increase of customer satisfaction levels. Customer satisfaction levels increase, yes. So what is the measure? The measure is what we have in the booklet. The measure is what basically we have. The measure, ladies and gentlemen, here is the CSR, the customer satisfaction index. The customer satisfaction index. So now go on the ground and give us the remarks there. Go on the ground and give us the remarks there. Give us the remarks there. So when I compare really, actual percentages are lower by far. Actual vis-a-vis, actual vis-a-vis, actual versus the actual versus the target. Actual is lower than target. So is this good for business or bad for business? Is this good for business or bad for business? Good or bad for business? It's bad, yes. Because I would want the customers to be satisfied. It's bad for business. So this is bad for business. Therefore, poor what here? Poor performance. Therefore, poor performance, like that. And then the other thing that I'm able to see now are the trends of the actuals. So the actuals, again, there they are reducing. So the actuals are reducing. So the actuals are reducing. Actually, they reduced from over the years. The actual was 78% to what year, somebody? 78% to 59%. So again, this is what here a signal of poor performance. A signal of poor performance like that. It's a signal of poor performance. It's a signal of poor performance. It's a signal of poor performance. It is as simple as that. It is as simple as that. But how you structure your question is so important, really. Being able to pick up the key performance indicators and being able to make comments there is very, very important. Ladies and gentlemen, after that, I would expect us now to go to the next one, which is what here? The internal processes. Internal business processes perspective. So internal business process perspective, could you kindly identify those metrics given? Could you kindly identify metrics given there and tell us whether they fall under the internal business perspective? Yes. Processing time for goods, yes. Yes. Processing time for goods. So in this case here, the objective is to minimize processing time of goods returned under warranties. Under warranty. We want, when somebody brings back their refrigerator, would want our processes really to be very fast and return this thing to the owners, right? That's the objective, right? So in this case here, what is the measure? The one given in the question. So the measure, the one given in the question, just the same. I write it the way it is. Processing time for goods, processing time for goods, returned on warranties, into bracket replacements, like that. So go to the general remarks. Compare the actual vis-a-vis target. From what you guys are able to see there, are we doing better off or worse off as a company? Are we doing better off or worse off as a company? Worse. I love that. It's worse because you can see we are target of 1 week. These people should be able to get back their things. And yet you can see the actuals are way higher. So the actual is higher than the target. That's bad. So for this one here, it's going against this. The actual is higher than a target. So in this case here, poor performance. And then you can see that the actual time taken is increasing. Again, poor performance, because basically this is going against what? You can see we started from 2 weeks to 3 weeks. So it's increasing. Great. Internal business process perspective. Great. Now, is there any other objective under internal business processes? Is there any other objective under internal business processes? Any other apart from processing time? Apart from processing time, any other? Lead time, yes. So number 2, we have the lead time. So number 2, you're right. We have the lead time for stocking. So in this case here, the objective there will be to minimize lead time for restocking. It's a process. Remember, this is a process. Restocking is a process. It's a process. We need to automate this to minimize lead time for restocking, right? So in this case here, the measure itself, just like it's written there, the measure itself, in this case here is the average lead time for restocking. Average lead time for restocking. Average lead time for restocking, great. And then now we go to the comments. Compare actual versus target. Actual versus target. Compare the actual versus target. What do we have there? If you compare the actual versus the target, what do we have there? Poor performance or bad performance? Remember, lead time is the time taken for these guys here to deliver goods to us. The faster they deliver to us, the better. So it's poor because, yes, you're right, because when you look at the actual versus target, we can see we were targeting 3 days. And yet you can see the actual there are on average here. So actual, please write there for me that there is a delay, yes. Actually, write there for me that the actual on average is higher than the target. The actual on average is higher than the target. Therefore, poor performance, as Jimmy tells us, poor performance because of what are the delays? Poor performance because of the delays. Poor performance because of the delays. Poor performance because of the delays. Because of the delays. Poor performance because of the delays. Like that. How about, ladies and gentlemen, general in terms of the trend? General in terms of the trend. In terms of the trend, general. In terms of the trend, general. General in terms of the trend. In terms of the trend, you can see that the actuals are doing what here? The actual is increasing. The actual is increasing from, the actual is increasing from 3 to 4.1 days. The actual is increasing from 3 to 4.1 days. Again, a signal of what here? Poor performance, because as Jamie told us, that signals what here? More delay. That signals more delay. That signals more delay. Right. Any other things, and gentlemen, that you can pick up very fast under internal processes? Is there any other thing you can pick up very fast? Yes. Total number of staff grievances lodged. The third one is the total number of staff grievances lodged. Somebody may ask, why are we taking these under internal processes? Ladies and gentlemen, remember, this is a quality issue. Any quality activity goes to where? Goes under internal business processes. It's a quality issue. At the end of the day, the quality here, our process will not be able to operate. Employees, in this case, who are disgruntled, automatically will affect how we operate, right? So the third one, without Mwalimu explaining so much, this total number of staff grievances lodged in a year, we can see we were targeting nil, but they were so high. They were so high. And then you can see even the trend there is increasing. Even the trend there is increasing. So they never gave us anything to do with what here? Innovation. Yeah, learning and innovation. Why not learning and innovation? Why not learning and innovation? I know there is always that confusion, but ladies and gentlemen, remember that our processes are normally run by who? By people. When we get, in this case here, employees who are really, really disgruntled, employees who are complaining, right? Who are complaining, that automatically comes under who? That automatically comes under the business what here process perspective. But I agree. At times you get some ACCA questions telling you that the employees, for example, are disgruntled simply because they missed on, or rather they were not being trained, right? Just an employee comes like this and is given to go head on to the real job without any training. You know, learning and innovation, basically you should be looking at what here? The training aspects. the training aspects. We should be looking at the training aspects. And then number two, the motivated staff automatically will go under where? Under this process perspective here. Process perspective. Unless they link that demotivation to lack of learning, to lack of what here? Learning. Otherwise, under learning, we shall be looking at, ladies and gentlemen, on learning, we shall be looking at what we call what here? Like how many new products are you producing every year, right? What about employee? Like if you look at, actually to understand this better, I would want us to look at May 2019, question number 4A. May 2019, question number 4A. May 2019, question number 4A, sorry. May 2019, question number 4A. May 2019, question number 4A. So May 2019, question number 4. Not 2019. It's May 2018. I'm so sorry. No, November. Actually, November, sorry. November 2018, question number 4A. Are we there? November 2018, question number 4A. November 2018, question number 4A. Are we there? Yes. Yes. So always start with the required. Compute the performance indicators that could be used for each of the 4 perspectives of the balance scorecard. MWL Limited has in the past produced just one fairly successful product. However, a new version of this product has recently been launched. In the meantime, development works continues with the aim of adding related products to the portfolio of products. Given below are some details of the activities carried out during the month of October 2018. So you can see the units produced, existing versus new product, production cost, existing versus new product, sales revenue, I can see there, hours worked, I can see there, development cost. Like now this development will go under learning and innovation. I told you research and development. Very important. So I would want to see your arguments, you great students of mine. I would want to see you guys mapping this out to the balance scorecard. Let's see what you'll be able to get there really. Yeah, somebody should be able to help Jamie. Great. Yeah, so try your best. Remember here, they don't want you to be stating like, what is the objective? No, they simply want you to give them the key performance indicators, like the percentages, etc. No, a lot of talking here. Tell us in this case that under development cost, I'll use this, right? And really, even when you are marking such and cast them, there is no like a hard rule saying that this is correct. No. Yeah, like Atino is telling us that under the financial perspective, we have sales revenue. But now remember, here you don't have sales revenue over the years to see the trends. You don't have the sales revenue to see the trends. Here you would need to compute a ratio. Here you would need to compute a ratio. Yeah, like the profit margin, yes. Gross profit margin, I like that. Because you see here, really, you can't have a comment about the trends because we don't have years. You don't have years really here. You don't have like actual versus targets. So you need to devise some percentage here to use. Some percentage to use. Some percentage to use. So we have the financial perspective. So we have the financial perspective. So we have here the financial perspective. Financial perspective. So we use here the gross profit. The gross profit margin. Right? So in this case here, gross profit, I look at the gross profit of the existing products. Existing products. So existing products, how do we get a gross profit? You will simply take the sales minus the production cost. Sales minus the production cost. So I can see the sales there. For the new products, we have 550,000. Is there somebody who is able to see sales of 550,000 minus the cost? The cost of producing the old products I can see there is 375,000. So this will be gross profit all over the sales. Sales, which is 550,000. So remember, to get gross profit margin, I'm taking gross profit over sales. I'm taking gross profit over sales. And how do we get gross profit? It is sales minus cost of sales. Sales minus cost of sales, like that. So 550,000 minus 375,000 all over 550,000, like that. Can somebody in this case here give me the gross profit margin of the existing products? So somebody is giving me a figure of 31.8%. So this is 31.8%. Then go to these new products that you're producing really. The new products that you're producing, the gross profit, I'll look at the sales of the new products. The new products, in this case, your sales is 125,000. 125,000. In this case here, minus the cost of producing the new products. Cost of producing the new products, there will be 70,000. 70,000 divided by the sales of 125,000. Can somebody in this case here give me something there? Yeah, 44%, right? So I can see that new is better. I can see that new is better. New is better. We are growing now. Yeah, we are growing. So in this case here, the concept is that the gross profit margin is growing. These new products are posting a higher gross profit margin, meaning that in this case here, this is a sign of what here? A sign of better performance, sign of good performance. Sign of good performance like that. That's gross profit margin. Great. Now, can we go to the customer perspective? Let's go to the customer perspective. Quite tricky. Customer perspective, I expect to acquire new customers. I expect to acquire new customers every day. I expect to acquire new customers every day. I expect in this case here to grow my customer base. I expect, ladies and gentlemen, in this case here to, so under customer perspective, really, what are you going to look at? What are you going to look at under customer perspective? And the customer perspective, quite tricky, but you can reason out something there. You can reason out something there, the customer perspective. You can reason out something there, really. Yeah, demand, I love that. Demand, yes. I love that. Demand, yes. I love that. Demand. Units produced. Actually, here, for lack of some very good KPI, I look at the new sales. I look at the new sales vis-a-vis what year? Just the total sales. The new sales, like these new customers, the assumption is that the new products are being bought by who? New customers, right? So if I look at the new sales here, the new sales revenue is 125,000. Is 125,000 all over the total sales revenue. All over the total sales revenue, which would be 550 plus 125,000. 550 plus 125,000. So I'm trying to see, are we really growing? Are we getting new customers? Even if you decide to use production still, new products over what year, somebody total product that we have, you'll still get marks there. So somebody in this case is giving me what here? Somebody is giving me something here. Somebody is giving me some figure here. $18.5. So, and of course here really I can't make any comparison because there's no target, there's nothing really there. They only wanted us to give them key performance indicators. Now, could we kindly go to learning and innovation? Learning and innovation. So under learning and innovation, what are you going to bring here? Under learning and innovation, what shall you bring here? Under learning and innovation, what shall you bring here? Learning and innovation. Yeah, development cost, yes. Bring here development costs. Development costs. Development costs. Right? As a percentage of total sales. As a percentage of total sales. As a percentage of total sales. So I can see 47,000 divided by total sales. This is here. 550,000 plus 125,000. These will only be equal to what here, somebody. Yeah, new development costs. You're right. %8.5%. 8.5%. 8.5%. Is that correct? Somebody, is that correct? Development cost as a percentage. $47,000 over total sales. What percentage of the total sales are you putting into development? At 6.96. Just my friend, you check again. Check again. Check again, 6.9, 6%, like that. Great. Now from there we have, ladies and gentlemen, the internal business perspective. So the internal business perspective, the internal business perspective, here the only way out is for us to look at the efficiency in terms of production cost. So production cost per unit. Production cost per unit. And here we are lucky because you can separate into existing versus new. So existing production cost, what are you able to see there? Existing production cost, I'm able to see 375,000. Total, 375,000 divided by the total units produced of the existing product, divided by 25,000. Could you kindly give me this figure? Kindly give me this figure. 375,000 divided by 25,000. Kindly give me this figure. So nasema ni 15. How are our production processes efficient? Great. I can see Fatma asking a very good question there. And then the new, ladies and gentlemen, I can see production cost there. Production cost for the existing. Production cost for the existing is 70,000. Divide this by the new units which were produced. New units produced, which were 5,000. 5,000. So in this case, you'll be able to get something there. You'll also be able to get something there. Right. So nasema 14, 14. So I can see some improvement. I can see some improvement there. Right. And as Fatma is asking us, what if in this case we come and use the productivity per hour? The same. You can't be wrong here. The productivity per hour. How productive are we in the internal business processes? Right? Productivity per hour. So again, give us, if it's productivity per hour, give us existing. You're able to see the number of hours. So like we know here productivity per hour, we know how many units we're producing. Like the new, we produced 25,000 units. Which took us how many hours? Which took us how many hours? 5,000, isn't it? Which took us 5,000 hours. So 25,000 divided by 5,000. 5,000, wengi wajajibu hiyo, wengi wajafuata, wengi wajajibu. But remember, it's about a high level, really. So 5. And how about the productivity per hour for the new? Productivity per hour for the new. So the new, I should take how many units did we produce here? For the new, I should take what divided by what here, somebody? For the new, I should take what divided by what? 5,000. You say 5,000 divided by 5,000 divided by 1250. Thank you so much. 1250 like that. 1250 like that. Which will end up giving us a what figure, somebody here? George says 4. Thank you so much. Again, I can see somewhat improve. I don't even have to comment anything because this was just about provision of what here? Metrics for performance appraisal. Provision of metrics for performance appraisal, like that. So really the concept is that you're supposed to get a high level, and then you'll be able to slot things here and there. Of course, also the introduction is very important. How you introduce the question. That statement that I told you, that really, if I'm the one given an exam of this nature, I'll start by saying that a business balance scorecard is a financial instrument, which is used to appraise an entity, performance of an entity, from how many perspectives? 4. And then I state them. Number 1, financial. Number 2, customer. Number 3, etc. And then now if it's metrics alone, I start mapping them out like that. I'll end up getting so many answers without knowing, so many marks, without knowing what I'm even doing, like that. Now, you guys had this question in your last exam. Were you able to tackle the question at all? Balance scorecard. Were you able to tackle that question at all? Were you able to tackle that question at all? It's good to be honest. No. JB says yes. JB says yes. No, okay. So please do me a favor. I would want us to get out that question, try doing it ourselves. Look at the answer that you have in the marking scheme. Look at the answer that you have in the marking scheme, and then we compare notes, we compare notes, we compare notes. Yes, except the internal business. So ensure that now you are doing it, you're doing this.